Hi guys, this is Temilo and welcome to my YouTube channel. In this video, I'll be talking about how to use the lower time frame to increase your risk to reward in trading. Okay, so as you all know, I trade SMC, the smart money concept, and I buy from the demand zones or from the bullish order blocks, and I sell at the supply zones or bearish order blocks. Okay, so in order to increase your risk to reward on any particular trade, it's best to try to look for lower time frame entries. This will allow for more room for you to be able to use a better lot size and also to get confirmations on your trade. Okay, so most of the time you want to start your analysis from the higher time frame. Okay, this will allow you to understand the trend and know where price is going to or heading to. Okay, so but by the time you are done looking out for the trend on the higher time frame, and the higher time frames are time frames from the 1 hour time frame to 4 hours time frame, daily time frame, and other time frames, while the lower time frame anything from around below 1 hour time frame down to the 1 minute time frame. Okay, so by the time you identify your trend on the higher time frames, you do not want to get into your trades from those higher time frames. You want to go down to your lower time frames to try to look for entry opportunities. Okay, so on this particular Euro USD, I'll be using Euro USD as a case study right here. On this particular trade, we can see that we are bullish on Euro USD from these particular points. Market is pushing up. Okay, we have the push up, push down, push up, push down, push up, push down, push up, and presently we can see that price is pushing down. Okay, so there is looking to our left right here, we are able to cite this lower time frame. So looking to the left right here, we are able to cite this demand zone, unmitigated demand zone. Okay, so when price pushed all the way up from right here, this zone was left unmitigated, so giving us this set of equal lows. Okay, and we have this demand zone, so we'll be looking to take a buy from this demand zone right here. Okay, so instead of getting into this buy from this level right here, that gives us about 22 pips in stop loss, and once you get into a trade, you want to know where your stop loss is and where you will be exiting the trade. That is the place where you'll be taking your profit. And looking at this particular pair right now, we can look forward to say we can take our profit right here, because right here we have imbalance. Okay, and just up here also we have imbalance right there, and this is a good supply zone as well. Okay, so for our overall take profits, we can decide to take our profits right here. Okay, or you can decide to take your profits at this level. Okay, so just as your entry matters a lot, so is your take profit as well. Okay, you want to make sure you pay yourself. So for me, I will prefer to take my profits right here, so because the market can reverse at any point in time. Okay, so this will be about 81 pips in profit if this demand zone holds price. Okay, so now as you can see, the risk to reward ratio is 3RR on this particular trade. It's almost 4, but not exactly 4. What can we do to increase our risk to reward? Also, using the lower time frame entry, we allow for lesser stop loss to be used. Okay, for example, now we have this 22.6 pips in stop loss. So let's take, for example, you want to get into this trade and you have, let's take for example, you have a 10,000 account, probably from a prop firm, okay, a $10,000 account, okay, and you risk 1% of this account per trade, okay. So that means for every trade you take, you are risking 100 US dollar, okay. So now, by using your higher time frame to get into this particular trade, in order to lose this 100 US dollar, that means your lot size to use on this particular trade will be, let's quickly do the calculation. We have 22. You can easily use your position size calculator to get the lot size to use, okay. So with 22.6 pips stop loss, let's just round it up to 22, and 22 pips, you will be using about 0.45, yeah, around 0.45 lot size at this particular point, 0.45 lot size to take this trade, okay. So, but how can we increase our risk to reward, okay? Instead of using this 0.45, how can we maximize our profit right here, still risking this $100? What you need to do is go down to the lower time frame and try to look for a lower time frame confirmation so as to have a better risk to reward, okay. So we'll do that now. Let's clear this out. And so what we need to do is allow price to come into this demand zone that we have marked out. And once price is inside this zone, we now know that there is a mitigation of this particular zone, okay. So once there is a mitigation, we want to then wait for a break of structure, okay. So as we can see right here on this lower time frame, we want to mark out our structure. We have this visible high, we have this low, we have this high, we have this low, okay. For us to get this lower time frame confirmation that can increase our risk to reward, we need this low to be taken, this high, this lower high to be taken out, okay. So this particular lower high, we need it to be taken out. So what we can do is set an alert right here and wait, okay. So let's see if that will be taken out. So as you can see, price is still close to, price is still going down, okay. So now, as you can see, this didn't get taken out. Our lower low was being taken out. So now this becomes the high that we need to take out before we get into our trade, okay. This is the significant high that's taking this lower low. So now let's see if price will actually break above this, okay. So as you can see, price has taken out this lower high, okay. Price has taken out this lower high, and just when price took out this lower high, let me cut right there, okay. So we can see the break of structure happen already at this particular point. This was taken out with just a tiny wick. So, and as you can see, we have this imbalance left right here. All of this candle is a big momentum candle, so we have this right there, this demand. So now what we need to do now is to now use this lower time frame point of interest, okay. So what we can do now is use this. This is our higher time frame point of interest, the demand from the higher time frame, right? So now on the 5 minutes time frame, now we are now able to identify a new point of interest. So we take our buys from right here, and for stop loss, you take your stop loss to be at this low, because this is the last structural low that took out this lower high right here. So in order to be safe, you have your stop loss at this low, okay. So now still targeting the same take profit that we have marked out from the higher time frame the other time, as you can see right here. So the other time from that higher time frame, 1 hour point of interest, our total stop loss was so if you recollect from the 1 hour time frame the other time, our stop loss was a total of 22 pips. So right now, by getting a lower time frame entry, we are now able to get a 12.2 pips in stop loss. So the other time, our stop loss to use for the 1 hour time frame the other time was 0.45, right? In order to risk 1% of our account. This is the lot size that we were able to use to risk 100 US dollar. So right now, being able to get these 12 pips stop loss now, we are now able to use about 0.82 as opposed to at least 0.82 lot size as opposed to 0.45. So this has increased our profitability if this trade should go through from this entry point right here. Okay, so let's see if and if this goes through and our take profit is it right here, we will make more profit on this particular trade than we will make with the 0.45. So let's quickly have that 1 hour point of interest back right here. Let's quickly have it back. Okay, let me clear this. Okay, so the other time this was the 1 hour point of interest, and this was our entry point, and this is our okay, it was about 22 pips the other time. So let's just have it right there. Yeah, so and our target is for this points of interest. So if we add our entry from right here, from this H1 order block targeting this area, so we have 82 pips in profits to get from this particular trade. And if we add a lower time frame confirmation right here, our take profit will be 87.9, okay, because we waited for a confirmation entry. So now going back to the 5 minutes time frame now. So on the 5 minutes time frame now, you can see that if this, okay, let's just have this, if this ends up hitting take profits, so we were tapped into the trade and yeah, so as you can see right there, take profit was it, okay, on both trades. So now let's take for example someone that got into a trade at the 1 hour and someone that got into this trade on the 5 minutes time frame. So for the person that got in on the 1 hour, the 0.45 lot size that was used and the total pips got was 82.5. The total profit this person will make will be 371 US dollar. So someone that took this trade right here is making 371 US dollar. So let's calculate for someone that waited for a lower time frame entry using 0.82, just because this trader was able to refine his entry. So 0.82 multiplied by the total 87.9 pips. This particular trader that waited for lower time frame confirmation entry will be making a total of 720 US dollars. Okay, so this is how you use your lower time frame to increase your risk to reward. You were able to make more profit just by looking for a lower time frame entry. Okay, so I would like you guys to also implement this in your trading. Try to get into your trades from the lower time frame. Okay, this will allow your risk to reward to increase. Okay, so you are able to maximize profit by using the lower time frame. So you can try to practice this on your backtest this on different pairs and see for yourself. The only disadvantage of waiting for a lower time frame entry is the fact that there are times you might miss out on trades. Okay, so there are times price may not actually come back down for confirmations, lower time frame confirmations like this. Markets can tap into this zone and just spike all the way up. Okay, so there are times when you miss out on trades, but it guarantees you of more profitability when you wait for lower time frame confirmation entry. I hope this video was explanatory enough. I hope you are able to learn from it. Please, if you have any question, leave them below in the comment section. I will definitely reply to them. All right, guys, that will be all for now. Until next time.